I think the really interesting story about Netflix is increasingly the international story. And so what our survey picked up was that record high levels of satisfaction, record low levels of churn, and record high levels of usage for Netflix within the UK. And for the first time ever in the 7 years that we've been tracking this, it's now more popular or used more often to watch TV shows and video than YouTube. That point was crossed in the US a few years ago, and it just got crossed in the UK. And we also did a deep dive on India. Now, this is an immaterial market for Netflix today, but the growth strategy for Netflix is to expand, land and expand in Asia, if you will. They've been rolling out more original content. They've launched 3 new original content series in India, which, based on our sources, seem to be doing extremely well. There's a chance for that market just by itself to add several million subs to Netflix over the next couple of years. So the international story for Netflix, and that's the key on the stock, I think from here on, seems to us to be getting stronger. We like the stock. We like the shares here.
Mark, I know you don't cover all of these names, but your take on some of the weakness we saw in the social media stocks yesterday and in the semis today. I mean, Micron below 46 here, worst week, on pace for the worst week of the year. Is this about the sort of Chinese trade affecting or bifurcating tech in some way, or is it something else?
Well, I think there were a few fundamental pieces of news that came out yesterday that caused 2 of these stocks in particular. Twitter, which was testifying yesterday, and actually also Netflix to trade off more than the group. There was a story about Apple coming out with a new bundle that would compete, music and video bundle that would compete with Netflix. I don't think that's really dramatically changes the competitive landscape for Netflix. And on Twitter, what's becoming very clear is they may need to materially increase their spend. Twitter may need to go into an investment cycle. Facebook has already said they're going to do it. They're going to take down margins. They're doubling CapEx because they need to spend on security. They need to spend on artificial intelligence, which is turning out to be more expensive than they had thought. And I think Twitter is going to have that moment. It's coming through that moment now. So in a way, we're learning now, just in the last few days, is that Twitter's been over-earning. And I think that's what caused Twitter to trade off a little bit more than the other names yesterday.
And I wonder if you could just add to that also that research that came out yesterday on people uninstalling Facebook and just loosening their connections with Facebook a little bit. It just seems like a little bit of a news flow challenge to the bull case right now. You had these patterns, too. When Apple's got a launch event, it often means the stock has kind of had its run. I think it's very much more atmospheric conditions and positioning than it is people saying, well, this is kind of game over for the big picture mega cap tech story.